all the bets are on India for the massive growth. In every market cycle, some or the other country is being targeted to make it super rich. There are all the ingredients to make me believe that this time the turn has to be for India. Post COVID, a lot of manufacturing bases are shifting gradually to India. And I see that this is just the tip of the iceberg. There is a lot more yet to come. There was time wherein we used to say that we cannot compete with China. I agree. Some of the products we cannot, like toys. They are selling toys at the raw material price. Maybe we cannot compete with them. But your mobile manufacturing, footwear manufacturing, remember these two sectors: textile, footwear, and now recently mobile. These three sectors, there are lot of production happening now in India by Western countries. For some or the other reason, they want to avoid China. One major reason is that China is coming very close to America. Today, China is the second largest economy in the world. It is very close to America. They fear that it may become the supreme economy. And today, they have got an excuse of COVID. Because of this COVID, the entire world is under a economic crisis right now. So there are n number of reasons to believe. And then here there is a political stability. The government is providing them a lot of incentives. There is something called as PLI scheme. When you are free, do research into Google. Production linked incentive. In the last 20 years, China was under us. Our economy was much better than Chinese economy. But China started with a PLI scheme. It means that if you do so much of production, if you do so much of export, government would reward you cash. This thing government has started now in India. So government has realized that this PLI scheme is excellent for export oriented growth. This can be a game changer, especially for manufacturing units. That is why when you are free, try to open up some stocks charts which are relevant to textile, footwear, mobile manufacturing. You'll see that all the graphs are going up. Because now our pricing, because of PLI scheme, because of the incentives provided by the government, the production cost is reducing. We are able to now compete with China, with Indonesia, with Vietnam, with Bangladesh. In textile, these are the four countries which are giving us tough competition. And it's possible in India, not in other countries, because our GDP growth is maximum and government tax collection is abundant. So 1 lakh crore, 2 lakh crore is nothing for the government. But that 1 lakh crore gives us a revenue of 10 lakh crore through exports. Like that, the government will earn more dollars, which again further improves stimulus, provides stimulus to the economy. It acts like a catalyst to growth. So all the things are in place. There is political stability. We are already ahead from the COVID crisis. It's like a wonder what we see. All the global countries, majority of them, China, till recently was under lockdown. So already their economy is all into thrashes. And majority of the developed countries, they are still getting lot of cases on COVID and lot of deaths are happening there. Thanks to the effective vaccine and the mass production of it, that very quickly, so far at least it looks like that we have all recovered from this pandemic. I hope so. If these things continue, then India next 10 years is going to be very, very bright. You shouldn't be missing this growth story. Maybe this will become like a story to tell to our next generation that there was an economic phenomenal growth in India from 2020 to 30 post COVID. It may have come like a blessings in disguise. That's how I feel. COVID has actually come as a blessing in disguise, at least for India. Let's hope so. Things get better from here. But for now, for sure, you got to be investing into India. There's no looking back at all. The world is betting on India, and you should, being in India, you should definitely have confidence in it. I'm not telling to put your property and everything in stock market. Just 20% of your net worth. Roughly calculate what is the value of your house, what is the value of the lands or whatever that you are holding, what is the value of the gold. What is your net worth you calculated by yourself? 20% of that. You should be, minimum I'm saying 20% of it, at least for the next 5 years, you should be investing in India. My target is that 20% automatically should balance to 50% by massive growth. And should exceed that. Let's hope it happens. Alright, coming back to the market cycles. So the inflation starts rising, the equity NBFCs do very well in the initial few years of inflation. Problem is in the later years of inflation. Always understand, when we are beginning with the inflation trajectory, everything is good. It is actually supportive to the economy. There will be shakeups, there will be waves, there will be minor crashes of 5-10% due to inflation. But reasonable inflation is actually a boon to the economy, a boon to the stock market. Problem comes when this thing continues for a very long time. 2 years, 3 years, 4 years is okay. But if it goes beyond that, then it becomes a massive problem. Because the raw material cost will increase so much that public will not have the capacity to purchase at that high price. Talking about an average person. That is where the first signs of economic saturation comes into picture. That is what leads to recession. Companies are posting fantastic results justifying the high PE ratio that market quotes. I would say that only from this quarter, when you are free again, go into Google and do this homework. Because this is a clear indication of the face of the economy. What is that? Car sales growth. In the last 4 quarters, I want you to do research on the car sales growth in India in the last 4 quarters. The car prices have shot up like anything in the last 4 years, yet the sales are happening with an amazing figures. So this represents that our economy is in a good stand. Still, I want you to do research and find out what is the percentage of figure of growth in the last 4 quarters. You'll get an idea whether our India's economy is performing or not performing. So companies are posting fantastic results. So we have seen that from the last 3 months, every quarter company has to come out with the result. That is the rule of the market. Any company listed in the exchange, every 3 months they have to declare results. So the results what they have declared is just surprising from all fronts. So that's the reason why you can expect better and better results in time to come. This is just the beginning. Positive economic data starts pouring in. Commodities are on rally. Gold, silver remain lackluster. That's what we see now. Positive economic data is yet to come. We are still hitting 6% GDP. Within ourselves it is not good because we have already hit 8% before. But compared to globally, it is just amazing growth, I would say. China is struggling with even 3% growth. UK is in negative. America 1 to 2%. So by all means, it looks like 6% growth in the current economic conditions looks just amazing. And recently I had recommended a stock called as IIFL. If you remember IIFL Finance, I am having myself lot of shares of IIFL Finance, and the results which we could predict a year back is now showing up. Let's have a look. I'm expecting the price of this stock to go to 800 easily. maybe in a year or two. I would not recommend now because we already entered at 240, 250. The price is now 360 something. 364. So price has already shot up, but if you look at the results, it looks like it can easily double up from here. Let's see the quarterly result, the recently posted results, that is June 2022. No, we want September. September results are not updated here. Let us see here, bseindia.com. You'll get to know how you can find out the growth of any company. September results are not updated here also, but here you should be able to see. Announcement, where is the announcement? Okay, here. Outcome of the board meeting held on 26th October, that is yesterday only, they posted the results. I am really surprised by it. So today you can see a positive reaction in this stock. It will open itself higher. So this is September quarter result. Every 3 months companies have to post result. There are two sets of results, standalone and consolidated. Always look at consolidated. So what is the purpose of looking at consolidated figures? What is standalone? What is this consolidated? That all discussion will come in fundamental analysis. Right now, only point you have to keep in mind is that look for consolidated numbers, not standalone numbers. So if I see the results, the total revenue has touched 2022 crore. That is highest in any quarter. Never company has grown so much. That is 2022 crore. If I compare with the previous year, September 2021, it is a growth of approximately 20%. Alright. And compared to the previous quarter, it is a growth of approximately 5%. 20% the company is able to grow only on a turnover every year. Then coming to the expenditure, 1522 crore is the expenditure. The net profit is 530 crore. Compare this with the previous quarter. 430 crore becomes 530 crore. Almost 25% growth only in a quarter. That is only in a quarter. And then 370 crore to 530 crore. That means 160, that is approximately 50% net profit growth in a year. Company growing by 30% also per year fits our criteria. Because this company is available at 50% discount if you look at the growth factors. So ideally the price has to, even to be conservative, if the company is growing by just 20%, the price of this stock should be minimum 700. That fundamental analysis will tell you why it should be 700. But it is growing at 50%. Maybe you can see an exponential growth like Bajaj Finance into this company. So tax expense and all that, net profit after tax is 400 crore. This is the highest ever profit company has earned in a quarter in the history. Is this clear? So company at what price it is available? At just a market cap of 12,000 crore, whose net profit is 1188 crore, growing at 20%. So we will derive what should be the fundamental price for this company once we come into fundamental analysis. This is all the balance sheet. Okay. I will not want to go into technicals right now, but just to give you a preview how exactly the results are there and how does the stock react to it, we'll get to know. You'll get an idea today. Alright, getting back to the market cycles. So companies start posting fantastic results. That is what we are able to see in every company. I've shown you IIFL Finance, but open the top 100 companies of Nifty. Everywhere you can see amazing growth. All the stock market experts, analysts and general retail investors who left the market in skepticism, fearing crash, now start investing in this phase as the fundamentals is now driving liquidity. They sold low are now buying higher. Those who got fearful during the COVID time that companies will post bad results and all that, and it did happen. Companies for a quarter or two did post worst pathetic results. But now that is history. Today we see companies posting amazing numbers. Automobile was all under crisis. Now it is an amazing growth. Recently when I went to Thailand, I could see most of the Maruti cars there. There is only Toyota Maruti running on the roads. 80% these two cars and 20% some other brands. Toyota also in huge number, but I could see lot of Maruti cars here, Swift and all that, Ertiga. So imagine this country, there must be this car manufacturer, they are exporting in every country now. Really we used to see that. We used to import cars, now we have started exporting even bikes. 3 lakh Hero Honda bikes are sold every year, exported. 3 lakh. 1 lakh goes only in Bangladesh. So India is now getting into that trajectory which China has been 20 years back. You can't even imagine that kind of growth would come. You can't even imagine. And this will become a history. You will tell your kids and all that during our adolescence age, we used to be struggling with the economy. We used to be struggling for the 10 rupees, 20 rupees also as a pocket money. The real estate price used to be so cheap, the milk used to be so cheap, and all that is going to become an history. 5-star hotel, hardly there would be one. Bullet train, forget, we could not even dream about it. All this is going to become a reality soon. What you see in the developed countries, that kind of feeling you would be getting in India in the next 20 years. So all those people who are fearful are now entering, but we have already entered long back. That is the advantage what we get. We have experienced that growth from 10,000 to 17,000 which people could not. No doubt, even if they enter now, I would say they'll still experience growth. But those people, maximum number of crowd will come in the euphoric stage. That is what is the next phase. Very, very interesting one. The most exciting phase I would say is the euphoric phase. But the most, dominating phase or the phase where easy money is printed is maturity. That means the companies are posting results, the market is rising. Companies are posting results, the market is rising. In fact, in the next phase, the rise is very sharp, but the volatility is also high. But here, it is like slow and steady moving. If market is rising by 300 points, it will fall by only 100 points. Rises by 300 points, falls by only 100 points. So there will be stability of growth here. Series of IPOs lined up, and worst IPO also gets oversubscribed. So companies plan for an IPO by looking at the market conditions. So when they see that the market conditions are good, they also would want to sell their stocks for a very high price. So they are literally taking the advantage of the situation. They are coming up with an IPO at some cosmic valuations. That means when you look at the fundamental analysis of the company, you feel that, hey sir, this company should not be worth even 100 and its IPO is priced at 300. They just want to suck money from the public. They are taking the advantage of the situation. Only buy selected IPOs. There is a topic on IPO also, very interesting one. And in IPO, very easily you can double your money in a year, but limited capital. Per member 15,000. So in case you have got 4 family members, you have got an HUF account and all that, then maybe 1 lakh of money, you can double it up within a year. If you follow only the IPOs which I recommend, if you follow your own analysis which I am going to teach you during this training, you will get an idea which IPO you need to apply. I'll give you the most simplest formula. I'll recommend you 2-3 names who are experts in IPO, who has given 30, 40, 50 years only for IPO. If these people are telling you to buy, you buy. They are telling you to not to apply, you don't apply. As simple as that. The number of demat accounts being opened are increasing, turnovers increase in the markets, visitors increase in the stock market based websites. So slowly the excitement is coming back, because I myself have experienced a lot of people are asking for new demat account among my relatives, my friend circle and all that. So demat accounts are increasing. If you look at the turnover, go to Google and type their daily turnover in NSE, daily turnover in BSE, you'll get an idea that the business to these exchanges is also increasing. Go to alexa.com and type there Alexa rank of money control. It will show you every day rank. The ranking is improving. NSEindia.com, BSEindia.com, moneycontrol.com. Check the Alexa ranking. Household money is flooding the market. Those people who have saved the money and the money is idle at their home, they have also now started investing. I have seen lot of participation even by housewives. Recently, lot of ladies are showing interest in the stock market. Because see, what happened is I do not want to indulge into politics, but I am speaking the reality. During the reign of Congress, it was corruption everywhere. I don't say there is no corruption now, it is there here also. But here it is now, right now, more of state government corruption rather than central government. In all of India, there is corruption still today also. You want to construct a building, to 4 people you need to bribe for every permission. But that's not happening at central level, it's all happening at a state level. Those fraud leaders what we had, like say talk about PM or any that, so they are not eating money, maybe their subordinates are eating money. But still the quantum of corruption has reduced drastically at a macroeconomic level. That's the reason why all the what used to happen before is, even if a foreign company would want to invest in India, there also they used to take money. Any military deals that had, this is also very important now. This is one sector again that you have to keep in mind, defense. Some game changing things are happening in defense unnoticingly. Know where it is going on in any newspaper, know where it is going on anywhere. India used to import 5 lakh crore worth of weapons, ships, marines and all that every year. Every year 5 lakh crore we used to spend to buy defense equipments, your aircrafts and everything. Now this figure is going to come to 3 lakh crore. In fact, India has already started their own manufacturing. You must have heard about HAL. Already in Balanagar you'll be able to find it. Hindustan Aeronautics Limited. We do not require any choppers and all from abroad now. We are able to have an international quality choppers manufactured in India, and believe it or not, we have actually started exporting defense, which was like a dream for us. This is where it's the maximum cost. Our country, we may say that our tax collection is 15 lakh crore. Only in defense we are spending 5 lakh crore. Why? Why not we spend that amount for the growth of the country, to give subsidy to the poor people, help farmers? Anyway, we are not at war. Then why? It is because of, again, the macroeconomic factors. Why we have to spend 5 lakh crore is because our neighboring countries are also spending such a huge amount. We have to be in competition with them. America, Russia, China, Pakistan, everybody is spending huge amount every year on military to make it more and more effective. Investing heavily into technology. If we don't spend, then sooner or later we will become an easy target for any one of these developed countries. Today we have some 50 nuclear weapons. Russia has got 500. Not required. Last 30 years, not even a single, not, forget last 30 years, never in the history we have used even a single nuclear weapon. No country except for that atom bomb which was blasted. But yet every country is putting heavy money into it because not now, maybe in future we may need that. So that 5 lakh crore every year what we are spending, maybe after 50 years, 70 years or 100 years when the world war really happens, India has also should be also a powerful nation, then only the big nations would support us. That is why we have to spend. There's no choice for us. Government also doesn't want, but what to do? We are forced to do it. But one thing what government has done good is that they have started manufacturing locally rather than importing, and now they have started export also. Missiles and all that are getting exported now. When you are free, again, homework. Find out which are the defense stocks listed in Indian Stock Exchange and look at their chart patterns in the last 6 months, 1 year. You already seen that Nifty did not perform, but see how these stocks have performed. So you have to be there where the growth story is. Let me show you quickly at least HAL chart. Are you able to see the growth? This is a government company. Generally, government companies do not rise, So from 630 rupees in 2020, now we are at 2500. Generally, we do not expect such a massive growth, at least in the government companies. But we are able to see that here. You'll see all these figures will increase like anything. 26,000 crore is only your flying jets, choppers, flying jets, and all that. Now, among this, lot of it is exports. So one is we are able to save, we are not spending money to other countries. Secondly, we are able to get more money by exporting it. So Nepal, Bangladesh and all that. So they have now started giving orders to India. In fact, India's target is that Western countries should be able to purchase our product. Let's see if that becomes reality, and if that thing happens, then maybe you can expect dollar to go down till 60 also. May take some time, but it is bound to happen. Now that we have begun with the change, we have a long, long way to go. Alright, getting back to the phases. Household money started flooding into the market. Inflation and industries commodities prices are rising. You look at the chart pattern of every metal. You look at the chart pattern of oil. Look at the chart pattern of coal. All of these are slowly climbing. Banks interest rate, you must have already getting the news in the last 1 year. Slowly the fixed deposit rates are rising. Banks interest rates are rising. So these are all the indication that we have entered the maturity phase. And you very well know this chart has to be printed in your mind forever in your life. In maturity phase, how the graph exponentially increases for the stock market indexes. The metals, banks, capital goods, infrastructure, NBFC sectors start outperforming, whereas defensives like pharma and FMCG underperform. So what are you going to do now? In your portfolio, you should not be holding any pharma or FMCG stock. You should be totally concentrated on metals, banks, capital goods. Capital good means power, infrastructure, NBFCs and all that. These are the stocks that you must be holding now to get the maximum benefit of the economy. I already have shown you some of the chart patterns every 8 years, how the old economy and new economy cycles are getting repeated. From the middle phase of the maturity, that is 2 years of good earning season, the smart money slowly leaves the market. So we have just begun in the last 2-3 quarters with the good results. So another 1-2 years we have very good results. You will see that big players like Warren Buffett or the likes of Rakesh Jhunjhunwala and all those kind of people with high net worth, they will slowly start exiting the market. Now comes a big question. So should we also exit along with them? You need not. I've already told you this. Their capital is so huge that it will take them 1.5, 2, 3 years to exit. Now, Berkshire Hathaway, company run by Warren Buffett, has got a net worth of 50 lakh crore. He can't sell that. If he puts 50 lakh crore, the stock market will collapse by 50%. Even in America, I'm saying. Because the daily turnover itself is like 8 to 10 lakh crore. So they cannot exit in a single day when they like. They have to sell in installments. They have to buy in installments. They have to sell in installments. That is why they cannot grow by 30-40% now. Not possible. For us, it is possible. We exit in a single day. We enter in a single day. Our funds are very small to create an impact in the market. So let them exit. We still have some more time. When they have sold at least 50, 60, 70% of their holding, then we will plan our exit. For that, it will take minimum 1-2 years. That's why I say for the next 2 years, there is no need to worry about the market at all till 2024 end. Then we'll see at 2024 end where we are. Are we at the top of the curve, middle of the curve, at the lower of the curve? All that, the picture will be clear that time. But for now, the picture is very clear that for next 2 years, need not fear, buy the fear in case you get it. Where I do not mean that market may not fall, market may definitely fall, but that fall is going to lead to sharp rise. That fall is an opportunity for you to enter. That fall should not be fearful, you should be excited. Then we'll see in 2024 what happens. From the middle phase of the maturity, which I'm expecting maybe by 2024 end, the smart money slowly leaves the market to enter the gold and silver, and you suddenly see the precious metals gaining because of this liquidity. But the time to exit the market or start worrying is not yet. But it is advisable that you divert bit of funds in gold and silver at this stage as hedging. So post 2 years, if we feel that we are already reaching at the top of the curve, we will slowly nimble our funds to gold and silver. Every day 0.5% or every week 1%, something like that we would plan, and we will be shifting our funds to gold and silver, because when the market crashes, the boom comes in gold and silver. Very, very important point. See, these are all golden words to be remembered for lifelong. Every letter is worth millions if you are even starting with a minor capital, because eventually this will become very, very huge if you are following with discipline, reinvesting through the power of compounding. Gold and silver price moves in tandem. First point you have to keep in mind is that gold and silver are like brothers. Both of their graphs are exactly same. Maybe if gold is rising by 10%, silver may rise by 15%. Gold is falling by 10%, silver may fall down by 15%. But both are brothers, they move in tandem. The graph pattern is same. Value is different, but pattern is same. So when we exit from the market, we are actually parking our money slowly and steadily into gold and silver, because here people would cry when the market is crashing, but we would be joyous because gold and silver, what fall comes there, that much better growth comes here. Index down 10%, gold, silver up 10%. Imagine double advantage to you. One is you have saved 10% of the money, secondly you have gained 10% of the money. That is how you will be able to achieve a high compounding rate. Told you, enter the train just before it is about to start. Had you entered into gold and silver 5 years back, today you would not have got even 10% return. So what is the use of jamming the money? Even now if you buy it, you will regret, because stock market will move with double, triple speed than gold and silver. 4 times the speed. Only when the accelerator reduces there, we get into gold and silver. Because the real acceleration is going to happen here. Then from here we exit, and where we go, that topic will also come. But keep this point in mind that gold and silver, the best time to invest is during the economic saturation because of high inflation leading to recession. If these 3 points are matching, economic saturation, recession with high inflation, which is what I'm expecting anywhere from here on, after 2 years, maybe after 5 years, maybe after 7 years, only after 2 years we'll be able to sell that. But not till at least 2 years, I forecast any kind of big recession. A 1-2 quarter recession may come in America because of the heavy dollar printing during COVID time. That's why I'm saying till March, little uncertainty is there. But that is not a recession what I'm talking about. That's not a recession of economic saturation. That's a short-term recession because of the dollar printing during COVID time. You must have seen exponential growth in equity market even during uncertain times of COVID. Now we have to face the brunt of it. For 3 quarters, for 3 months, there may be a little bit of pain. But we are going to be selective. We can start our purchases now. We are only going to buy the stocks which have not yet risen much and where the results are impressive. Historically, the best phase of the returns in the stock market is the maturity phase. That's why I say that I love this phase. Or growth phase. Both are same. Growth phase or your maturity phase. Very unexpected and unprecedented returns can be expected, but of course it is never easy to hold on to the market, and you require heart of steel to embrace immense volatility and swings and sharp V-shaped recoveries too, which are deep cut to sometimes more than 20%. Very important point here. During the, I told you the graph, it looks very plain when I show you in just 30 centimeters, but 15 to 25 years cycle means how broad it would be. You can very well see that. So if you have an zoom in, if you zoom in into the graph and see, there will be lot of waves in these lines. So these waves are nothing but market rise and fall, market rise and fall. So what it says here is that making money from the market is not easy. Though you are very clear that maturity is a good phase of the market, companies are posting results and you will also make very good returns out of it, but market will do its best to throw you out. It will try its best to remove you as early as possible because it doesn't want you to make money. It is a zero-sum game. Rich class people, HNI, they want to make money out of you. That is why 10% people only make money which are already rich. 90% people who are middle class or poor people, they lose money to the market. But this knowledge will save you. This knowledge will bring you in that 10% elite class. So what you will do? You are already prepared. Yes sir, there will be swings. I know that the weather is bad. But then again, there will be calm. I've given you an instance. What may happen? I'm showing you already a trailer now. What I experienced, that trailer I'm showing you. From the year 2003 to 2007 was the growth phase of the Nifty, which is, I told you, we have already entered now. So be prepared. This is what is going to happen. The flashback is there in front of you now. Between the year 2003 to 2007 was the growth phase of the Nifty, where the returns of the indices was 7 times. Phenomenal growth, yeah. Index rising by 7 times is not a joke. But understand this fact also. Whatever the growth has happened, every cycle the growth will reduce because the base is increasing. Understand the point. We were a small economy, we had grown big. Now big will become bigger, but we cannot multiply the way that we used to do it. That's why I told you, invest in penny stocks, invest in mid-cap stocks where the maximum growth can be experienced. But don't expect Reliance to double. That time Reliance was only 20,000 crore. So it was very easy for the index to grow 7 times. Now it may not be 7 times. It can be 3x, it can be 2x, 3x, 4x like that. So now comes the growth phase where also a maximum you can experience a multiplication of index. Minimum double. That's why I'm saying minimum 35,000 target, first target. But not going to be easy because this was accompanied by 10% cuts 10 times, 20% cut 3 times, 30% cut for once. Now you know how the ride is going to be. You are going in a flight. You will definitely reach your destination, but there will be lot of turbulence. You have to hold on with your seat belt. That's all. Do not even for a second think that it is danger. Do not even think it. Market will do its best for you to feel that. Though I'm consistently saying this, but that fear will automatically come to you. But these words, these slides, these notes will only save you. When I'm already telling you this can happen, then you shouldn't fear. But if I don't tell you, then you can fear. If the pilot is saying, all of you please fasten your seat belts because we may experience a turbulence, then you relax a bit even during turbulence. This was already known. But if it doesn't say and all of a sudden the plane starts shaking, what happens? Fear comes in your mind. So maybe these 3 lines in the blue color will help you to experience this entire maturity phase by not exiting. Some people may have exited here. Some people may have exited here. Some people may have exited here. But you would stand tall saying that, yes, I know this will happen. But one thing I assure you, that how much deeper the cut, that much sharper the rise, V-shaped recoveries will come. Some falls we will be able to predict, but some of them will come unnoticed. But even if they come, maybe your portfolio from 1 lakh becomes 2 lakh, 2 lakh may become 1.5 lakh. Still hold, don't worry. That 1.5 will then, when it will rise, it will go to 3. 3 will again get back to 2. 2 will go to 4. This is how the growth will happen. Don't expect a smooth graph there. Think long term. Don't think short term. Don't think mid term. Enjoy the full cycle of the market. In fact, if that kind of fall comes, somehow you take out the money and put more into the market, I would say. Whatever that you may have saved with your salary or through your business, or you might have sold any property, or somehow that you have got some kind of savings, put that money in during these turbulent times. That's why I'm saying, till March, if at all any such cut comes, 10%, 20%, or for that matter, maybe 30%. I'm not expecting 30, but let it come. I would be trying my best to put in more and more funds. That time you can average only the stocks which I tell. And then you'll realize only after 3 months, 4 months, sorry, that was an excellent decision what you have taken. Don't have funds? No worry. Remain invested. Don't look at your portfolio day-to-day basis. Look once in 3 months. Only then that fear will be little less. Then comes the last stage, euphoria. Now this is a phase which is a gambling phase, I would say. Tom, Dick and Harry, everybody becomes rich in this phase. You close your eyes and you choose any stock. You don't require fundamental analysis also. Euphoria is a stage where the dogs, horses, cat, everything is flying. Everybody becomes a stock market expert. You put hands in any stock, it rises. You'll say, sir, I've chosen this stock and it rose. I did not even do analysis. You may be right. That is what is called as euphoria. That means extreme excitement. Like what has happened for Bitcoin from 4 lakh to 50 lakh. That kind of growth will happen even to the stocks which do not have any intrinsic value. You say, sir, this company does not have even 1 crore and the valuation is 10 crore. And that 10 crore will become 20, 30 crore also. You must have seen Harshad Mehta movie. There's a shell company whose prices is shot up to 1,000 rupees. That kind of things you can expect in this phase. Even a company which is totally shut down, company which is having 10 times loans than its own property, they will also start flying. Worst of the worst company, pathetic management, politician run companies, or companies where the management is totally chore. I'll tell you what is chore management in fundamental analysis. Those companies will also rise. Everything rises here. Everything. That's why I told you everybody is a stock market expert in euphoria. And this is where your portfolio on day-to-day basis also you can see. It just rises. Just like a clock, your portfolio would rise. It is a phase of panic buying. You might have seen a panic selling, but I would say this phase it as panic buying. People want to buy. They don't want to leave funds even for a single day. That is how it is. every 1 hour your portfolio value may increase by 0.5%, 1%, like that it would be. It is the shortest phase, but a kind of honeymoon period for the market. Euphoria does not stay for years and all. 6 months, maximum 1 year. But we should plan our exit in 3 months only. We should not wait for even 6 months. We don't want that last bit of exponential growth. We cannot exit right at the top of the curve. Near the top of the curve, we have to exit because we don't know where the graph will bend. It can bend anytime. You are moving a vehicle with 200 speed. Excitement is there. But when the accident happens, it is going to be really severe. It may take away your life. That is how this phase is defined. The speed is high, but the risk is getting higher and higher. Illogical theme stocks keep rising here. Generally, what happens in this phase is illogical combination. Example, say Anil Ambani companies. See, when a sector is rising, we can understand. But here, non-sector groups will rise. Any company where the word India is found, that price rises. Any company where green word is found, that price rises. Any company starting with A, the price rises. All the companies within Telangana rises. Or all the companies starting with alphabet F rises. Like that kind of illogical themes will happen here. That is an indication. When these things happen, your mind should keep knocking, saying that, beta, be ready. We have to get out of the market. Get ready. We have to get out of the market. That signals have to come. We are just waiting vigilantly when the time of exit is there. We are planning our exit now, not entry. No fresh funds have to be deployed. Heavy turbulence may cause even accident. That is a warning here. Small and mid caps rise in panic as though there is no tomorrow. Series of upper circuits in some of the stocks. Advance and decline ratio is in way favor of advances. If 100 stocks are rising, 3-4 will decline. Series of upper circuits. Every day you'll see that a company 100 rupees becomes 105, next day it becomes 110, third day it becomes 115. Like that, every day like steps it will be rising. You'll find steps kind of pattern in the chart. Climbing steps upwards from left to right. Like that kind of chart patterns you'll see in most of the penny stocks. Gold and silver prices are also rising too sharply because of smart money leaving and shifting asset class. Those people who are smart enough, they don't even tell you, unnoticedly, their money is getting shifted to gold and silver. We have to also now be aggressive towards gold and silver, not stock market. Inflation is getting higher and reaching its peak, so is the interest rate. As I told you, I'm expecting 80 rupees milk to become 100 rupees. Say milk packet 60 rupees should become at least 70, 72, 74, 76. Like that kind of inflation has to come. Keep this point in mind. It may look funny, but this is reality. Pani puri. You are getting 20 rupees a plate. That should become 30 rupees a plate. Keep this point in mind. When pani puri, 20 rupees a plate, ordinary bandis I'm saying, becomes a 30 rupees a plate, you should call me, you should message me, or you should call me and say, sir, we have reached euphoria. This is fact. You'll see this. Inflation affects every type of commodity, every industry. When milk price at least shoots up by 10%, signal should come and you should ring me and say, sir, looks like whatever that you have predicted is now coming to reality. Petrol, minimum 120 rupees a liter. Minimum. And then what else we could say? Inflation day to day, what we use. Oil packets, minimum 180 rupees a liter. Sunflower oil, what I'm talking about. Ghee, minimum 600 rupees a kg. Your burfis, kaju burfi and all that, if there are like say 1000 rupees, it should become minimum 1300. Like that kind of figures, when you see at least one of these things will happen, you'll get an idea. Yes, whatever the sir is saying is now looks like is coming to reality. That is all a signal that we are now experiencing the last stages of growth. These are the last stages of growth, which happens in extreme inflation. Extreme inflation will only lead to saturation and recession. Keep this point in mind forever. Have a note of it. Very important point. Already it is there here, but still I would want to mention it separately also. Extreme, prolonged inflation leads to economic saturation. By the way, what is recession? Recession means negative growth of the country back to back for 2 quarters. I repeat, negative growth of the country, that means all the companies together, negative growth of the country back to back for 2 quarters. That is called a recession. So when peak of inflation is seen, you have to be prepared. Now next thing will be saturation. Saturation will lead to recession. The market will be acting in advance. By the time the news comes out that we are in recession, market would have already fallen by 50-60%. So don't wait for that headlines to come. You already have seen the signals, what it can lead to. Get out, that's it. There's no question to be asked. In fact, I will also be sending you warning messages, but I want you also to be prepared for it. I would be more happy when you are telling me this. So it looks like we are heading to high inflation environment. It looks like we are now heading to a market crash. That when you tell me, then only my worth of training, my efforts will pay me off. That will give me more satisfaction rather than I give you kind of spoon feeding. I want at least one student to come into that name where the young generation people follows. You should be having at least 10,000 followers in Twitter. I'm sure. I've trained at least 500 students till now in stock market. At least one name will definitely pop up. And I would feel proud when they say that's something that they have learned through me. That's my target. Inflation getting higher and reaching its peak, so is interest rate. Demat and folio accounts are creating new records every day. You go into Google, even in newspaper also you'll be able to see that. But when you want to see it at your own convenient time, just get into Google and type there number of demat accounts opened month on month basis, number of demat accounts opened quarter on quarter basis. Because maximum crowd will come in the market in this phase. India, most of the people invested in Bitcoin above 40 lakh, above 40 lakh, because you can buy 0.1, 0.2 coin also. They thought it will go to 1 crore. Like that, when index, let's say, is Nifty is trading at 35,000, people will think that it will go to 50,000, 70,000, 1 lakh. Like that excitement they'll have. But your mind would be telling yourself, no, don't trust them. Crowd is coming here, we should be exiting. Wherever there is crowd, you should leave that asset class. You should leave that stock. You should leave that asset class. You should leave that index. Again, an important point. If crowd chases any asset class, sector or index, we know that 90% people lose money in the market, so why do you want to be there where 90% people are there? That is what is crowd. Example, best example, Yes Bank. I've seen my own clients, 50% of the clients are having Yes Bank and Tata Motors. I don't want to invest into this stock at any cost. If you are having it, let me tell you, please plan your exit. Please plan your exit. And switch to the stock which I am telling, which no one is following. Where there is no crowd, I choose only that stock. Majority of the companies which I am recommending would be having least public participation. That is why there is a high chance of making money there, and which is what you have already seen. If you go into the history of the recommendations in my WhatsApp group, you'll see that the companies are unknown. Never we have heard about that company. Recently, I recommended Mahalakshmi Mahalakshmi Seamless. The price was 7 rupees change. In just a matter of 1 week, it is already at 10 rupees now. Thing is, public does not hold that stock. Maybe it will go to any price, limitless. Like that, two, three companies rises in our portfolio, it would have made huge difference. Hold on, guys. बोलो जीजू. हाँ बात कर रहे हैं. ओहो. अरे ये NMDC को क्या हुआ? 258 बता रहा. अच्छा. तो डीमर्ज हुआ तो 258 कैसे हो गया? हाँ. हम्म. हाँ हाँ बोलो. बहुत एग्रेसिव हो जा रही रामा विजन में. हाँ. नहीं आप तो स्टडी किए ही होंगे बोल रहा. 43 45 43 65. हाँ. हाँ. Sorry, that's what I told you at 9 I start getting calls. Anyway, no problem. We'll wind up in next 2-3 minutes. Even a layman starts giving tips. Barbers, drivers ask you about the procedure to enter the market. See, these things you have to test. You have to do acid test. You have to do water test. You may be going out for a salon. Just on your phone, casually like that. Anna, I bought this stock and the price increased by 30%. Like that, you see, and see how the barbers are reacting. They'll ask you, Anna, do you invest in market? Can you tell me the procedure? Auto drivers and all. Anna, what is the stock market? A lot of people are making money, it seems. What is the procedure for it? How do I make money? You are going to some wedding and all social events in a group of people. Hot topic discussion is stock market, stock market, stock market. Even non-economic newspapers like Deccan Chronicle, Sakshi and all that, in the headlines there will be an information about India's economy and stock market. That things have to happen, then only we are in euphoria. That is what euphoria means. Extreme excitement even in the non-participating public. That thing has to happen. People who did not think about stock market, who used to fear about stock market like anything, like say generally housewives and all, they are very fearful about the market. They are also saying, Anna, please tell me what is the procedure to invest in the market. Let us also invest in the stock market and all that. When the new crowd is coming in, you should get an alarm bell. That time to exit has come. I've experienced that and I feel like laughing at myself in the year 2007-8. How could I enter into this stage? Hello. एक मिनट. हाँ. 43.65. हाँ. 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 40 में डालूँ. 39.65. हाँ. 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 डाल दूँ या नहीं? हाँ. ठीक है. डायनाविजन 181 में सेलर है खाली. हाँ. हाँ. So put hand in any stock with your closed eyes and you'll make profit in few days. All the stock market analysts and experts are giving ambitious target on indices. Please, I told you, always act deaf. There will be people stating that Nifty will go to 1 lakh. There will be people stating that Bank Nifty will go to 2 lakh. There will be people stating that in next 3 months you can expect 20% return. All that you should ignore it. Here from one year, take it out from the other year. Only act sensibly. I told you my notes will work. Neither your television channels are going to work nor the newspaper is going to work. They'll misguide you. I'm telling you now itself. In capital letters, in bold letters, in double quote, print in your mind. They will misguide you. Only these notes will save you. That's all, guys. It's already time. Tomorrow we'll continue with the euphoric phase and then we'll begin with the fundamental analysis. Try to log in 7:50 sharp. We should start at any cost. Any doubts or questions, make use of the chat window or the audio control. Over to you now.